Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Tuesday, May 8th, 2012 is sponsored by Realtik. All right, let's get right into it today, folks. We have a lot to go over. Markets taking a pounding. Dow down 160, Nasdaq down 34, S&P down 16 on the day, basically 1 to 1.25%. And again, this is a result of a delayed reaction, in my opinion, to the news. Yesterday was Monday. The markets had extremely light volume. That enabled them to kind of get slowly prodded up to the upside off the gap down, off the news out of France and Greece, off of those elections. And today, people are realizing the enormity of the situation there, how this could literally affect the European Union. And with that, we're seeing a big time move up, or at least a solid pop on the dollar moving up a little bit, euro coming down, and again, sellers are out in full force on good volume. We have already done more volume in the market today than all of yesterday. Yesterday we did about 125 million on the SPY. Today we've already done 140 million. So it just shows you Monday you had the light volume float. Tuesday reality came back into check. The big boys were basically back at their trading desks and the markets collapsed. All right, now again, the big thing about this is the head and shoulders pattern. This is a head and shoulders pattern on the daily chart. This has now officially triggered. I want to show you exactly where it's coming from here. And again, here's a shoulder, here's a head, and here's the other shoulder. And today the neckline has broken. This means ultimately over the next couple weeks you'll trade down probably to the 129, 130 level on the spiders. Again, it will take some time. You'll have big bounces along the way, but I do think that's where ultimately you are headed based on the pattern formations that we see. And we just read the charts here. I'm neither a bull, I'm not a bear. I just follow the charts and make money. All right, so that's what we did see here, or we saw a breakdown of that head and shoulders pattern today. Going back to the intraday, you can see most of the selling occurred into the 11 o'clock time frame from the open. That was the majority of the downside. Since then, we've kind of chopped around. That's actually since the dollar's come off its highs and floated just down a little bit. That's brought the markets off those lows. All right, now there's some big stocks getting hammered today, folks. Absolutely big stocks getting hammered. FOSL is one of them. Take a look at this. Down right now, 37%. Or $46.50 to 79 and change on FOSL. All right, this is Fossil, and again, in my opinion, an overreaction. But look at the technicals here. I want to just show you how you know this stuff. Take the pivot low, start of the year, right? Take that exact low, draw a trend line across, and look at that. It's actually had a great bounce off of that level already. My guess would be that this will trade back into the mid-80s over the next couple weeks, just because, again, it just wiped out literally, 6 months, 5 months of gains here, and there's a lot of support down here. You have another level right here, which we almost tagged, and there's just so much support. I don't really see it going much further down. They missed on earnings, and their guidance was a little on the poor side, but a little bit of an overreaction to take away, wipe out, multiple billions in market cap, taking away 37% of the total value of this stock just on that alone. All right, so again, one to watch here in my opinion. What we're seeing is a lot of these stocks that report earnings over the past 2 weeks are getting crushed. We saw it on Riverbed. We saw it on GMCR. And then ultimately, a lot of these stocks do get a bounce the next few days and trade off their lows. In fact, GMCR today is actually up $1.80. So you can see it traded down for a couple days, and this is actually a good analysis technique of understanding the 3-day rule, which is something that we tell our members to abide by. 3-day rule basically says after any earnings, you wait 3 days and then look for the opposite move, essentially. And you can see if you had done that, here's day 1, here's day 2, here's day 3, you buy at the end of day 3, and you get a $1.79, $1.80 pop today. And again, that's just understanding the techniques of the market. And in my guess, I think you'll see the same thing from FOSL. I think it's even been crushed a little bit more. Their guidance wasn't as poor. Plus, there's no accounting questions at FOSL like there are at GMCR. So my guess is it probably trades back into the low 80s today, maybe 80 to 81. And then by tomorrow or even by Friday, I think you see it back to 83 to 84, maybe even 85. All right, let's take a look at a couple other things here. That's just one of those stocks that's getting crushed today. Mako's another one, MAKO. And look at this. I mean, this thing gapping down huge, down $15 on the day to really 26.5, 27. And again, just basically wiping out all the gains from the whole entire year just because of a bad quarter. Not that a bad quarter is not worthy of a big dump. It is by all stretches. But because of the bearish sentiment, because of the down cycle that we've been seeing, and again, we called this down cycle. We nailed this down cycle. Plenty of doubters every time we make a call like this because we're calling tops and bottoms, but it works out. All right, we do that here for our members, Research Center members. That's if you're a swing trader or a investor. The Research Center is where you belong. We give you swing trade alerts. We give you all the analysis, proprietary analysis to make money every single day in the markets and understand where it's going to go. And again, a great cycle call a while ago that's worked out perfectly as we continue to see the weakness in this market prevail. Looking at a couple other stocks, let's go to some name brand. We talk about what kind of is getting crushed today, but now let's talk about some name brand stocks. JP Morgan is down 72 cents. JPM is actually going to have some good support right here. So there's not much more downside until it comes into some very, very good support. You might get another down day or so here, but ultimately these are all major supports on the stock. So starting at around the $40.70 level all the way down to about the $39.50 level, just going to be a ton of support on this stock. I don't foresee it getting through this level, at least through the bottom level here, without a pretty solid bounce back up. After that, I think it's going to go down even more down to the 50 moving average, but again, it should be short-lived in terms of further downside in the short term. Apple continues to hammer on the gap fill. Remember, the big earnings announcement popped it. Since then, it could barely catch a bid. The stock's come all the way back in. Notice where it's holding, though. Gap fill. All right, gap fill from before earnings right there. That's support. Eventually, this will break. Notice the necktie formation right here. As the 20 slopes over the 50, my expectation is Apple will head lower. All right, guys. So, again, you might get a small little continued bounce for a couple days or whatever on Apple, but it's going to be short-lived. All right, we will see further downside in this market. There's a lot of bears emerging out there. We've been bearish for the last couple months, which has been perfect since the market top. If I show you the daily chart, let me go to the intraday chart on this. I want to show you where we call the beautiful market top. Actually, I'm going to do it on the 10-minute. 10-minute, we can see it even better. All right, we zoom out here, and let's go to the spiders, flip it over to the SPY chart. And again, this was where we saw the top forming, guys, and ever since then, that was the top on the market. Then you had the parallel lines. We broke. We retraced right to it. There we called a top right there again, and look at the collapse from that top. That is an awesome collapse from that top. All right? So that's what we have going on there. I'm trying to see if there's anything else I want to bring to your attention. Amazon's down about $3 on the day. Google's actually bucking the trend today. Google was strong yesterday, strong again today. And again, you can see it was higher early in the day, but considering where the markets are trading, this is actually a nice day on Google, up $1.15. So nice strong day on Google there. MasterCard's down 6.5. Intel's down 50 cents. Good fall there. The only stocks green on my screen right now of my big players that I watch, Google up $1.15, Research in Motion up 3 cents. That's basically it. All right, guys. So that's what we're seeing here. I'm going to step aside, get back to trading, making some money. I encourage you to come to the InTheMoneyStocks.com, take the Intraday Stock Chat free trial, which is for day traders, or the Research Center at InTheMoneyStocks.com, which is geared towards swing traders and investors. Learn the proprietary secrets of the pros. These secrets, literally, hedge funds don't know them yet. Institutions don't know them. The individual investor sure as hell does not know them either. We will teach them to you. You will revolutionize your way of trading. Come to InTheMoneyStocks.com and start rocking the world and profiting for life. Take care.